Hello, fellow Rebel Capitals. Hope you're well. I wanted to go over some signs that I see that would, I think, prove definitively the market is not done dropping. I think we went into a bear market. I'm not sure if the S&P is technically still in a bear market, but it's really come down massively since November of 2021. And I remember that date specifically because that's when Powell first came out and made the announcement that he was going to raise rates. And on this channel, on the George Gammon channel, I think out on Twitter, I was like, okay, this is not good for markets, and expect this to be the beginning of kind of the slide here, especially with the FANG stocks. But as we have seen, it's really kind of it's really impacted not just the FANG stocks, but the S&P, the blue chips, pretty much everything is or close to a bear market. And I think we've got a long way to go. Why would I say that? Well, because usually in a bear market, especially an extreme bear market where the yield curve is inverted to the extent to which we've seen in the last 4 or 5 months, you don't get to a bottom until there's capitulation. So capitulation is just what we saw in the real estate market 2009, 10, 11, 12. It's what we saw in the stock market in 2009. I think we got to the lows there. We got to 666 on the S&P 500. And it's what we saw during the cerveza sickness of March, when that first started to impact the markets and the markets woke up to the reality there. We saw capitulation, oil going to negative $38 a barrel. That would be an example of capitulation. So what does this mean? This just simply means, from a technical standpoint, that all the sellers are gone. They're gone. Every single person that is going to sell has already sold. Therefore, the only people that you have left are buyers. That's it. So even if it's very few buyers, since those are the only individuals that are left in the marketplace, because all the sellers have gone home with their tails between their legs, the only way for the market to go is up. So you're always looking for this capitulation. And I remember the GFC pretty well. I mean, I wasn't in markets. I didn't understand anything about macro, but I was watching CNBC periodically because I was running my business. So I was interested to see how this might impact my business. And I remember watching the Jim Cramers and I think, just the talking heads of the day. And then I really remember real estate in 2012, because that's something that I participated in to a great degree. It's almost 100% of my portfolio or my net worth. And then I remember vividly March of 2020, because I was doing so many YouTube videos on the topic. And I remember what it's like. And during those times of capitulation, nobody wants to be in the market. Nobody. They think the world is coming to an end. They think that the price is going one direction, and that is down. Whether it's the real estate market, whether it's the stock market, you just, again, you don't have, all the sellers have already sold. And so have we got to that point yet today in 2022? Not even close. Not even close. Now, I'm not saying that the market's going to crash tomorrow or anything. No, the market could go up. I mean, you have these bear market rallies. It could go back up another 10, 15, 20%. Who knows? It's probably very oversold right now, although we've had a couple big up days. So in the 1 month, 2 month, 3 month time horizon, I don't know what it'll do, but I'm pretty darn confident that over the next year or two, it will go down a lot further than it is today, because we haven't seen that capitulation that we need to bring in the next bull market. And the way I usually measure that isn't with technical indicators or candlestick charts or what do they call the thing there, the moving day averages. I like to look at psychology and kind of what's happening in the mainstream and in society. to determine if we've reached that capitulation level, because there's several things that you don't see at the bottom of a market, and you tend to see more when we're at the top of a market. So I wanted to highlight a couple of those things. First of all, let's go over to a chart. Let's make sure we got the screen share going here. There we go. All right, let's go over to a chart of the Dow. And this going back to December, November, this October, right around here is when the Fed came out and said they're going to go ahead and start a rate hiking cycle. Now, they didn't start raising rates then, to be clear, but they just started talking about it. And the market behaved or responded the exact way that you would assume. It pretty much goes straight down. You got a bear market rally right here and continues down. Then we've had another pop up to where we are today, around 31.5. And I think my base case would be it probably goes a little bit higher, and then you just see lower highs and lower lows. You guys will have to forgive me here. There's a serious thunderstorm out there. I don't know if you guys can hear that. But I just wanted to show this chart just for some context. So why am I so confident that we haven't seen capitulation? Let me go over to a YouTube channel that I just discovered because I was looking at Graham Stephan's channel during lunch. I don't know Graham well. I don't know him at all. I know Meet Kevin, one of his good buddies, very well. But I've got a lot of respect for Graham and Meet Kevin because their ability to produce YouTube videos is incredible. And so I always like to see what they're doing, with their thumbnails and whatnot. So I went over to Graham's channel, and he was talking about this guy. And the first thing that came into my mind when I saw his channel is, boy, oh boy, we are sure not at the bottom of the stock market yet. We're still not at the bottom, not even close to the bottom of these asset bubbles, because if we were, you would not see YouTube channels like this, because they'd be getting like 0 views. And before I go any further, let's go to the channel. So Josh, I know this is probably one of your favorites because he's definitely catering to your demographic. That's for sure. So do you know this guy?
Well, before we went on, I was asking you who the guy in the thumbnail was. So no, I do not know who he is.
Well, here he is. This is his channel is called the Swag Academy. And I guess he's here trading Forex, just crushing it with his do-rag, his mask, of course, got to have a mask while you're trading Forex, and your Apple Watch. And this, according to him, is the best educational Forex platform. And that would be the Swag Academy. And this guy's name is Swaggy. So the first thing I want to point out here is, again, this is what you don't see when you've reached capitulation. And this guy, I think he's trading Forex, trading currencies. I'm not saying he doesn't know what he's talking about. I would say that he's obviously a young guy, and to think that he's got the years of experience and going bankrupt and losing all your money and getting it back and losing all your money, that's really required, in my opinion, to be a sophisticated trader. And I don't know that he's old enough to have gone through kind of that roller coaster ride. Maybe I'm wrong, but the kid's, I'm guessing in his mid-20s, something like that. And you can see by his thumbnails, you've got the dollar bills, $100 bills. They're just raining down as he shows a chart of his most recent Forex trade. Here he is taking selfies out at his pool, his mansion pool, as he's just, I'm sure he just did his trades for the day. Probably made a quick, 20, 30, 40 grand, and just spent the afternoon out at the pool just taking selfies for Instagram. This is what you can do trading Forex, right? This is very easy. Anyone can do it at the top of an asset bubble. That's my point. When you're at the bottom, you don't see YouTube channels like this. And I remember, I mean, just think, for those of you who were around during the GFC, when the world was coming to an end and the S&P was down at 666, or at the end of the dot-com bust, you just didn't see stuff like this. Why? Because no one watched these videos. And this further proves my point, because let's go back to the chart and see what happened here. So you guys know in 2020, just boom, crash, falls out of bed. And then since then, we got down to under 20,000, 19,000 on the Dow. And we just went straight up in short time to 34,000. So almost a double. The market goes up almost by 100%. And during this time, it's not just stocks. I mean, it's everything. It's crypto, it's Dogecoin, it's all the meme stocks, it's the SPACs and everything, including the housing market. Just all these bubbles are just experiencing these blow off tops. So everyone wants to get in the game. So you would expect that YouTube videos about Forex and Bitcoin trading and NFTs and all this would be getting a lot of views during this time, which is an indication that the market is expensive, not cheap. So let's go back to the YouTube channel. And I want you to look at his views here, the number of views that he's getting. So you got 31,000, 26,000, 55, 16, 35, 20, etc. Not too bad, not too bad. But let's look at what he had when he first started the channel. And he first started, especially right here, this was right during this, or just prior to the cerveza sickness. And I'm sure it got all these views because when the cerveza sickness hit, all these kids are taking their stimmy checks and they want the beginner's guide to Forex trading in 5 minutes. Why would you not take your stimmy check and trade Forex if you can, make millions and millions of dollars and just hang out at your pool in the afternoon and just take selfies for Instagram? A no-brainer, right? So, and here the guy is in his house giving you his well, I don't really need to show you this video. You guys can tell what's going on here just by me hovering over here. The kid's got his basketball gear on, teaching you how to become a Forex millionaire. But look at the number of views. Josh, look at this. 623,000.
Yes.
371,000. 718,000. 435,000. 749,000. You see? Oh, and look at this one. How could you not click on this? How to get sniper entries when trading. He's got his basketball jersey on there and a do-rag. Yeah. The thumbnail says it all. I've got nothing to add. Wow. But my point is, when you see the market get more and more frothy, these types of videos get more and more views. So you could say, George, well, maybe now is a good time to buy or get involved because his views have gone from 700,000 down to 16,000. And I don't know that I'd go that far. I think it's definitely an indication that a lot of the air has come out of some of the bubbles. But again, we're nowhere near the bottom. We haven't hit capitulation, because not only would this kid go from getting 700,000 views down to 16,000, but you wouldn't see any posts. His channel would be just, he'd be talking about something else. In fact, he'd probably go back to talk. Once you see this kid on his channel, in fact, I would subscribe to his channel, at least follow it, because once you see him go from talking about Forex back to talking about basketball, then we're close to capitulation. That's how you know.
I actually heard that Jeff Snyder goes to the Swag Academy for his information.
Yes, I know. And Jeff just texted me the other day a couple selfies of himself out at his pool after he put on a couple $100,000 trades in the morning and just had nothing left to do. I think actually what he does in the morning is he studies the Euro-dollar market, and then he goes out and drives around in his Lamborghini in the afternoon and just take selfies for TikTok and Instagram. Just FYI. I bet you guys didn't know that about Jeff Snyder. Now you know. So main takeaway here, guys, is yes, there's some air that's come out of these bubbles, but we're nowhere near the bottom. And in order to determine when we've hit capitulation, just follow some of these YouTube channels. And I want to be very clear. I've got a ton of respect for these kids. These kids are doing great. You know, they're getting off their tail. They're doing something. They're creating content. This kid's probably making a ton of money. So bravo, good for him. But you need to use this as an indicator to determine when we're getting to the top, when we're on our way down, and then maybe when we've hit bottom, because this is just a perfect insight into market psychology. And I think you can look at as many charts as you want, as many technical indicators. You can look at as many moving averages and whatnot, but nothing does as good a job of predicting the bottom or close to the bottom as human psychology and what we just see in the mainstream media and now on social media.
What did you see in the 90 and 99? Were you around in the markets back then?
No, I back in 99, I was just barely getting into entrepreneurship. I think I had my t-shirt business back then, and I wasn't paying any attention to the stock market at all. I mean, I remember, the internet, and I remember going on to like AOL, and I remember with my t-shirt business, I built my own website, which at the time was a big deal. I mean, now it just sounds ridiculous. And of course you did. But back then that was actually like, oh, wow, you've got a website? That's how long ago it was. So this would have been, and I remember the internet was so slow, and it was still that dial-up thing where you probably don't even remember that, Josh, but you'd have to get online, and it would be like, it sounded like a fax machine. Do you remember that?
I have no clue what you're talking about.
Like I don't know why it would make those sounds, but it would make those sounds when you're getting onto the internet. But no, I don't remember. I just wasn't, in the mix. I wasn't in the loop. I didn't really care about the stock market even enough to watch CNBC or to be cognizant of what was going on with the dot-com bubble, the dot-com crash. I wasn't aware of any of that stuff.
I remember during March of 2020, I wasn't old enough to open up a brokerage, but you can if you have like a custodial account underneath your parents' name. And I had quite a bit of money, and I was begging my parents to let me open up a custodial account under their name and just kind of.
Why? How did you even find out that was a thing?
Because I was looking it up, like, oh, like how can I buy stocks if I'm under 18? And then
no. But how did you even know buying stocks was the thing? Like,
well,
how did you even know about trading?
I was locked in my house, and then I just started to read a bunch of macro books because it was right when we were just forced to lock down. And then I started to subscribe to your YouTube channel and stuff like that. So I was like, you know what? I was getting the stimulus checks, and I was making way more money than I was before. And I had a bunch of cash from my business, but my stimulus check.
Were all your friends doing the same thing?
No, no.
What were they doing with the stimulus checks?
They were buying like video games or just pretty much whatever you can get.
Oh, they weren't trying to like buy Dogecoin or
No.
They weren't getting into that stuff?
No, but I remember begging my parents to open up a custodial account because I really wanted to buy I really wanted to get like gold miners. I remember I was like a massive gold bug, but they wouldn't let me. So I had to wait until I turned 18, and it was probably a good decision anyway.
You were a massive gold bug at the ripe old age of 17.
Yeah.
The stereotypical gold bug, right?
Yeah.
That's funny. Well, that's interesting. I'm always curious as to the mindset of these kids that are watching these types of videos from Mr. Swaggy. But unfortunately, just if history is any guide, those types of kids, they usually lose all their money. But that's good, because they're kids and they got plenty of time to make it back. And that's how you truly get an education. I don't think you can only learn so much on YouTube. I think you learn a lot more and you learn what is necessary by actually losing money. Unfortunately, that's just the way we're hardwired as human beings. And most of these kids will fall under that category. And what happens is that as the market goes down, all these people that have made a lot of money on the way up, then they buy the dip, and then it keeps going down again, and then they buy it, and then they buy it, and then they buy it, and then they buy it until a point where they're completely bust. And that's how a bear market crushes so many people, even people that made a ton of money on the way up, and all they would have to do is just cash out and they'd be rich for the rest of their lives. But that very rarely ever happens, because people want more and more and more. They keep trading, they keep swing trading, they keep doing these things that made them a lot of money because they think they're smart, but what they're doing is they're confusing brains for a bull market. And they continue to tell themselves that they're smart. Well, this used to work. They keep doing it, and they just ride it all the way down until they're completely bust. And that's when the market capitulates, because all the sellers are gone.
Yeah, and you really need the leverage to have that kind of crash. I remember when you couldn't make it to the Mexico. I ended up meeting some dude who was an Australian, where he was like a real estate developer,
Yeah.
and he was making a ton of money. Saying now all he does is travel. He was going to all these like party cities and just getting drunk and having the best time of his life. And then he was saying, well, right now the Australian real estate market, he said directly, he was like, it's down 20% in the past like 2 months or something like that,
Wow.
which is unheard of. But then he said, tomorrow I'm heading right back to Australia because I'm gonna buy absolutely everything I can because this is the best opportunity I will ever have to buy Australian real estate again.
On leverage. Big
Yeah, and I was
leverage.
just like, "Why are you doing that?" And he was like, Do you not know, like, how great of a buying opportunity this is?" And I was just like, "Oh, okay." Like, it was nice to meet you, my friend. I don't
Yeah.
think that I'm gonna see him again, though.
Yeah, as a young kid that's never experienced a bear market, and all he knows is that prices just always go up, and he watches all these YouTube videos, and he's made a lot of money on the way up on paper, and then he just rides it down. Every time there's a dip, he buys, and he just loses more and more and more. And plus, he's on leverage, and he's got negative cash flow. So within short time, 6 months, he's gone from having a $10 million net worth down to zero, and going back to delivering pizzas for Domino's. And it's harsh, but that's the reality. And again, I think over the long run, the kids like that will be in a better place, because if you listen to any of the Stan Druckenmillers, the Jim Rogers, any of the OGs, and 99% of them lost everything at least once or twice when they were young. And that's how they learned the lessons that were crucial, that allowed them to be successful over the long run. So hopefully, when everything is said and done, all the kids on Instagram and TikTok and whatnot, they'll learn that lesson, but they'll do it at a very young age where they can rebound and be far better off as they get into their 40s and 50s and get a little bit more experience under their belt. All right, guys, enjoy the rest of your afternoon. As always, make sure that you're standing up for freedom, liberty, free market capitalism. See you in the next video.